So the panel debate raised some really excellent comments around the needs in the market, and I wanted to take a small amount of time this morning just to cover some of the ways that Kensington might be able to help you support these customers. One of the areas we discussed this morning was customers who might already have or might soon experience a credit blip. So I wanted to highlight some of Kensington's and our product approach really. So Kensington offers 3 different product ranges in addition to our Flexi Fix for Term range. Our Select range generally allows credit blips that are 3 years old. For example, a default still unsatisfied would be accepted if it was registered on the credit file more than 3 years ago. Our core range offers a very similar premise whereby we would accept any credit blips that were 2 years old, so 2 years registered on that credit file. And our most recent addition to our credit range is our Resi 6 range, the 6 standing for 6 months historic. Defaults and CCJs up to a certain value are accepted if they are 6 months old. And for unsecured payments, for example, if they are kind of 6 months payments have been made or maintained, if they're currently in arrears, that would be no problem for us as well. A great USP of ours is our communication default rule, so we ignore all communication defaults on all of our ranges, so customers who have recently had a communication default added would still be able to get our best rates on our Select product range. And this also applies to utility defaults up to £250 as well. So our Select range is available up to 90% LTV and our core range up to 90% as well. There are slightly tighter restrictions for 95% on Select and up to 85% LTV on our Resi 6 range as well. And those ranges are available in England, Wales, Scotland and Northern Ireland. But for our Northern Ireland customers, we currently max at 80% LTV as we are new to this market, but we do assess this regularly. But having a look now at other ways that Kensington can support business, we actually ran a LinkedIn poll recently, which we asked, what do you think the biggest challenge in the market is for customers? So firstly, thank you to all of the 100 or so brokers who took the time to vote. If you want to be included in these polls, please follow our page on LinkedIn, Kensington Mortgages. But the results are now in. And almost 50% of customers, 50% of brokers confirmed that saving for a deposit was the biggest issue. The second biggest issue that was voted for was affordability with the lender. Now, of course, recently we've heard about the announcement on affordability stress testing, so this may change the view of those who voted. Of course, there are still PRA restrictions that are in place in terms of how much business lenders can do above 4.5 times income. So we may not see mass changes across the industry after this announcement, but perhaps some. But back to the results of the poll, in third place with 23% of the vote, the biggest challenge in the market was rising interest rates in some brokers' opinions. So now on this side, there are a few options, hopefully on screen at the moment, that you should see that could support some, if not all, of those challenges mentioned in the poll. So firstly, Flexi Fix for Term, and I believe this product probably offers a solution for all 3 of those challenges. It's available up to 95%, so supports those with lower deposits. It can offer affordability boosts for all customers and up to 6 times income for first-time buyers, and provides security of rate for the term of the mortgage, so helping those with rising rate costs. The other big USP of this product is that it's called Flexi Fixed, so ERCs are flexible and waivable. If your customer wants to move house, it is portable, but if they wanted to go elsewhere for their mortgage, absolutely fine. We would not charge the ERC, it would be waived. The ERCs are only payable if the customer remortgages away from Kensington and stays in the same house. If they were to redeem the mortgage in full with their own funds, rather than remortgage it to another lender, that again would be another cause for us to be able to waive the ERCs. So looking at other ways that we can support customers with affordability, we launched our Heroes Mortgage back in 2019 to offer affordability boosts to certain key workers to help them move up and get onto the property ladder. And it's been a really, really great thing for us to be able to continue to support these key workers throughout the pandemic and beyond. It's available up to 90% LTV for police officers, firefighters, NHS staff, including paramedics, clinicians and nurses, armed forces personnel, and teachers and lecturers all fall into the Heroes category. It offers up to 5 times income, and when you imagine a nurse's pay slip with shift allowance, band pay, overtime galore, because we accept up to 100% of variable income, combining this with the 5 times income that we offer on our Heroes product, we can offer excellent affordability. Our professionals range is a very similar premise where we can offer up to 6 times income for certain professionals such as doctors, dentists, barristers. You get the type of clientele. The next way that we can offer up to 6 times income, and you can get 6 times income with Kensington, is if you have a high earner application. So this is regardless of job type and profession. This is regardless of whether they're employed or self-employed, whatever age they are. If you have an application which has 100k joint, we can offer up to 6 times income. So that could, for example, be Mr. and Mrs. Each have a 40k basic, a 10k bonus each. That equates to 100k on the application, and that at that stage we can offer up to 6 times income. Now, also on screen, we have our affordable deposit spaces and things that we've started to move into. And as the LinkedIn poll suggested, we also believe that supporting those with low deposit is very important in the marketplace. We launched into shared ownership last year, and we were the first launch partner with Even, which offers solution for some customers and as well as Propertunity. And as Craig mentioned in the webinar, we are underway with plans to work with Market Mortgage to again support customers with lower deposits on the property ladder. So I hope that provided some useful highlights of some of our criteria. If you have any criteria questions, your local Kensington BDM would welcome a conversation along with our fantastic telephone team who you can contact either via live chat or on the phones. But I would now like to hand over to Craig to run through our Kensington business update. So over to you, Craig.
Great, thanks, Eloise. So this will be very brief. So there's really kind of 2 things that I just wanted to pick up on today. One, I just wanted to talk about service. So we know it's a really tough market for brokers at the moment. Interestingly, Alex talked earlier about interest rates. Swap rates have gone up by 2%, whereas most lenders have only priced up by 1% yet. So this kind of frenetic, constant pricing up at short notice, unfortunately, I think is still going to be here for a while. We've got a few more weeks, possibly months of that to go. And I know how hard that makes it for brokers when potentially you get notice that products get pulled. Maybe you got an hour or two's notice. I've even heard of some people unfortunately getting negative notice where they tell you that the product went an hour ago. We're trying to avoid that, so we are pricing up at the moment. So our prices change tomorrow morning, and we actually sent the email out yesterday morning. So we'll give 2 days notice that you need to get a dip in, and then you've got 6 days to get to turn it from a dip to an app. So potentially up to 8 days notice to go from a dip to an app. And we'll always try and do that because we know how hard it is for brokers at the moment. So real focus from us on service. And happy to say, although the market's been very busy and there has been so many changes, we have stayed at a 1-day service for the last 6 months. So we've had a huge investment in the business to do that. We've got triple the number of underwriters that we had at the start of COVID. So we spent COVID recruiting and investing in the business so that we can try and protect service. And we're answering the phone. If you phone the BDU, last week was 74 seconds. And interestingly, even at 74 seconds, we do still get about a 5% abandon rate. So about 5% of brokers do hang up. Now, probably because they think they might be waiting for an hour or two, but actually the phone's just about to get answered because we are just over a minute. So it's worth holding on. And we do have web chat as well, which again is pretty instant. Then the other thing that we've really learned from brokers, and we've really looked at our service proposition to brokers. We've done a lot of broker focus groups. We've had some brokers into the business to tell us, to walk through cases, so what was good, what was bad, what we could improve on, what are their frustrations. And one of the things we continually used to get, and we've here with other lenders, is I need to speak to an underwriter. So rather than the underwriter putting a message on a portal, I have to go in, look at the message on the portal, maybe don't really understand what the message means or what the broker's looking for, what the underwriter's looking for. I then put something on there, upload a document, it's not what they really want, so we go around the kind of loop again. What we've been doing is encouraging our brokers to actually speak to underwriters, and underwriters being available to speak to brokers and have those conversations. And last month alone, our underwriters had 4,000 telephone conversations with brokers. So on average, for each case, an underwriter will normally speak to the broker a couple of times. Now, that won't happen in every case. I mean, we've had some cases we've offered in a couple of hours where it's gone through as an AVM. The underwriters had everything they needed straight away, so it's just been offered. But on average, we will speak to a broker twice per case. So we've got really good access between brokers and underwriters, which is what you've told us you want. So like I said, big focus for us on service, and I think 6 days at one day, and we're very confident we can hold that because we've got so many underwriters now. So if you are struggling with service with other lenders, then please keep us in mind. And our app to offer, we're in about 15 working days at the moment. That's one part. The second part I wanted to talk about was product transfers. So again, lots and lots of market feedback over the last few years about giving brokers access to do product transfers for their customers. That's meant a lot of work for Kensington to get into that position. Being a securitized lender, doing product transfers is quite hard because of all the securitization rules. We've managed to resolve all those rules now, and we've built a state-of-the-art product transfer system, meaning that brokers can go on, answer a couple of questions as long as they've given the customer advice, and they can pick the new product for the customer, and then when the customer's old product expires, it will roll onto the new product, and the broker gets a 30 bp proc fee. And what we will do is we will email the broker and tell them you have a customer eligible for a product transfer, the same time as we send the letter out to the customer. So the broker might get it a couple of days before the customer gets it, and potentially the BDM will talk to you about that as well. So very excited about that. It's in pilot at the moment, so it's gone through all our internal testing. It's a really good, slick system. That's now with a pilot with a couple of brokers. All we need is a couple of cases to go through successfully, which hopefully we can do in the next few days. And we'd be looking to roll out that to all brokers, hopefully next week, possibly the week after, but definitely I would say end of June, first week in July. So again, hopefully that gives you some options. Our product transfer rates are fairly competitive, and obviously it's a super slick system that is pretty quick and easy to do. So that has really been our focus. We've talked a lot in this webinar about our innovation, how we're focused on products and new solutions for customers, but we've also been very focused on the service we offer to our brokers. We only sell through brokers, so you are incredibly important to us. So thank you for all that you do for us, and I'll hand over to Eloise to wrap up.
Brilliant. Thank you so much, Craig. And thank you absolutely to all of our guest speakers today. And of course, thank you to yourselves for watching and joining us on this event today too. When you exit the webinar, there will be a short survey. So please do take the time to go through that. Let us know about what you want to hear about next. Like today's webinar, this has been created on the back of your popular feedback and demand. So absolutely, it really does go a long way. Please do take the time to follow us on LinkedIn as well, so you can hear all about our latest webinar news and be involved in any of our LinkedIn polls. The webinar today has been recorded, so if you've missed any moments or wanted to share with your colleagues, absolutely don't worry, we'll be able to make this available to you. So we'll send you out some links in the post-webinar email that we send, and it will also be available on our YouTube channel. Your CP